Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Could I please get a screen and audio check? Thanks, Dan. And how we doing in YouTube? Okay, and a check in YouTube, please. Okay, I'm not getting anything back from YouTube. I just want to make sure that we're good. Thanks, Dan. Okay, appreciate it. Well, good morning, everybody. Welcome to the Trader Lab. I'm your host, Tom B. It's October 17th, 2024. And this stream's about integrating bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. In addition, this stream is based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a library of webinars and 60 PDFs of structured trades for developing traders to reverse engineer and see if they can build out a business plan or trade plan that has a statistical edge using some of these trade ideas as call it structure that you can then mold into something that you can align with not only statistically but psychologically. That's the basis of the Trader Lab. The other part of the Trader Lab, so you understand, is that it is a community of like-minded traders who've come together with a full range of experience, from newer traders to traders. One trader we know who admits to it has over 50 years trading experience, and you guys know, for me, it's about 45. And the whole idea of Trader Lab is to separate the fantasy from the reality of trading. Trading's a business. In my opinion, it should be approached like a business. It's not a video game, and it is not a business where you impulse, and the impulsing is very much a chemically based induced behavior, fight and flight and all that. Do you understand the mechanics of how that happens, why it happens, and maybe the tools to get control over these states that are actually self-defeating? The business model that we look to that is proven, and I think it makes sense maybe to use a proven business model, is gaming theory, or how casinos operate. And the way casinos operate is they operate in a completely random or uncertain environment, same as we do. We never know what's going to happen moment to moment. So because we're in that state of uncertainty, we are triggered continuously by fear and then revenge and all that, FOMO. So casinos don't work that way, yet they're in the same environment we are. Why do they succeed? They only play games, or in our case, structured trades that have a statistical edge. Over time, even though they pay the gamblers, which they do, over time they extract the dollars from the gamblers. Why are they successful in building larger casinos, even though they pay the gamblers, give you the cocktails and maybe the ticket to the buffet, and they're still making a heck of a profit? So what is it? It is statistics. It is playing the games exactly the same way with anchored inputs. And I cover this in my primer webinar, and there's a whole library of webinars, not only on the concepts, if you will, of the business of trading, but also structured trades and examples of these processes unfolding in real time, just like you see here in the stream. And some of these webinars, and I'm going to move right on, and I have an announcement for you guys also. Some of these streams are up to 5 hours long of real-time narration. So now the way I start every day here in the stream is I have to go over the development of the market. So it's from the RTH open and then into the actual structured trades. And of course, past performance is never indicative of future results. Your risk and your opportunity will vary based on the work you do and your ability to execute a structured, vetted trade plan. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only, and there's also no cost to become a participant in the Bookmap Discard Trader Lab community and also participate in all the additional education that Bookmap provides at no additional cost. Now, let's see if we can get to our little announcement, which I think is pretty cool. Let's see if I can get it. I'm not sure. Sorry about this, guys, but it was kind of a last-minute thing, so I might not be able to pull this up. Let's just see. There you go. So this was just sort of came out of left field, so I didn't have time to make it look nice, but I think it's really important. This is exclusively for Bookmap server participants. In other words, if you're in Discord and you click the link in the bottom, you'll see a link to the Trader Lab. But once you need to confirm your email so we know you're not spam, right? Institutional Trader Series. Scott Pulcini, who you know, Alvin Jamur, who's a hedge fund manager, who I know very well, Brad Gilbert, bank trader Robert Rother, also managed a hedge fund, Marco Bosing, bank trader, and many others. It's only going to be in Discord. And you need, if you're interested in this and you're visiting in YouTube, you do need to confirm your username and email so we know you're not spam. Now there's more. How would you like to trade $1 million in SIM? Pretty cool. There's going to be a competition, and that starts October 29th. And there's going to be prizes and a lot of exciting things. I can't go into all of it, but you can find this out. Also, join the beta program. If you're in the beta program, you're going to get access to different add-ons, new heat map for the market pulse, and a lot more. The Blue Jacket competition, that is where you can win free Bookmap, data, different elements, prizes, and of course the Bookmap Academy. That's Thursdays at the market close. Now, you do need to be a Bookmap subscriber to participate in this. But guess what? There is a free digital version of Bookmap that you can download if you go to the subscription page at bookmap.com. Guess what? Then you're a subscriber. I would suggest, if you're serious about furthering your understanding of market mechanics, how the market works, why it does what it does, and order flow, you guys should be attending these, and you should at least get your hands on the digital version. So now you're a subscriber and you can take advantage of all that Bookmap offers, even the subscriber-only content, education, and more. So that's that. So I hope you appreciate this and why it might make sense. Now, this, by the way, is December ES, and this is called the Trader Map Lite. Now, what Trader Map is, it takes the algos out so we can see behavior. It doesn't have levels here, but I want you to see how order flow works. The heat map shows us where the resting liquidity is. Now, of course, with liquidity, it can be, is it real or is it Memorex? Here's something to know. We had our target for the day right here, right? And you'll see it on the actual, the other screen I'm going to go to. But this is just showing me the heat map. Now, of course, these are icebergs and everything else. We had a long here. This was our target coming down for the shorts. All of this is in the Bookmap Discord Trader Lab community. And this is a long coming back to here and above. And these are structured trades. And if you're interested in these, you can learn them. And I narrate these trades, and I don't call trades because it's not my job. And no, you don't need to take my stops. We all take stops. By the way, if you cannot take a stop, you cannot be in business. All businesses have overhead and costs of production. Just kind of important You know, the casinos pay the gamblers, and they seem to do okay with that. So, other than your emotional response to losses, what business is there? And I'm going to get to the RTH open here. What business is there that doesn't have costs? I don't know of any. Do you? So if we can accept that we want a career in this business, we have to be prepared for costs. And if you don't want to pay, as the saying goes, then you either work for somebody else and they take the risk, or you come up with a statistical edge and a plan that gives you an edge, just like the casinos do. And you also pay for, you know, I'm not going to say the cocktails, but you pay the overhead or cost of production. That's our business. And it's not complicated. What's hard for us is the randomness. So, by the way, if you have questions, please post them. If you're visiting in YouTube, put them over there. I'll do my best to come over there and look at them. Also, if you are in, hold on, the Bookmap Discord Trader Lab community, please post your questions. I'll do my best. And remember, everything you see here, these are available in the Trader Lab, but you have to vet everything. So let's go take a look at the RTH open. Now, of course, we have a huge gap. And what was the play yesterday? You guys do remember we were looking for, we had the sell-off the day before, big sell-off. I was looking for continuation selling early, trapping the sellers and creating a short squeeze. That was our play for yesterday. We got the selling in the morning. We didn't quite get to our downside targets yesterday, and that stream is available if you guys want to look at it. It's titled, I think, Trading in Multiple Time Frames, I think, or Higher Time Frame Trade Plan, I think. That's what it's called, and you can look at that one. It leads into what you're seeing today. And the idea is the market goes up to go down, the market goes down to go up. So what did the market do yesterday? The market went down, and we saw huge liquidity in the book that was at the low of the day. Now, at the time, when you see liquidity, you don't know, and we see it in the heat map, but you don't know if they're going to pull, if the sellers are going to consume them, what's going to happen. That's part of the joy of randomness. However, we noted it, we observed it, and we saw that became the low of the day. Then let's get the logic. The logic is then that the shorts who came in yesterday morning can get squeezed, and then the sellers on the down day, the day before yesterday, get squeezed. Now, let's look at it more extreme. We gap high and make a new all-time high. What is that doing? The shorts that are in this whole thing get squeezed out. So now we get the shorts squeezed out, and then there's a couple possibilities, and it's always joyous to have a possibility. We can open, go to the ETH high, continue, gap and run, or open and then reverse and test this, the all-time high. And then statistically, we have the overnight volume point of control. I'm going to give you some statistics. Past performance, not indicative of future results. You got to bet these for yourself, right? About a 79-ish% probability we'll get here. So that we're starting off with that, but we could also go straight up. But let's get some statistics down here, and then we'll go from there. Let me move this around. And you notice every day when you follow the stream, which if you have been, you'll see we talk about statistics. Why are statistics important? Statistics have to do with gaming. And the term statistics is not prediction. It is giving you something that most other traders don't have, and still the outcome is random. The statistics can suggest that we're going to go high, and we actually go low. So it's really a matter of detecting who takes control and then aiming for levels that have relevancy. There's a 62% probability we get here. So higher probability here than 62% here. Yesterday's high filled a gap. Let me get that one for you. 63% probability. Value area high, which we had yesterday, about a 43% probability. And this is our target for the day. Settlement and naked volume point of control. And that's only a 31% probability. So, Tom, why would you sell the market? Because the sellers took control. Then, how does the auction work? This is what's so important. This is auction market theory using a volume profile. Now, and what is the auction? The auction is pricing. What is too high? What is too low? What's just right? And the market rotates to try to discover these levels. So once we got on the short side, and I'll show you the actual structured trades, this was the target. Now, this could also be the target, and that's the end of it. Fill the gap. But this is yesterday's highest volume. Now, why is that important? High volume is where there's agreement. If I open out in left field someplace, it is possible that, number one, I will check the highest volume in the ETH, because that's the last auction with agreement. If I get below it, then what's my next level? It's this, and filling the gap or test, whatever, here, here, and here. And is it coincidence that this is the target? The answer is yes and no. The coincidence part of it is, are we going to get there? That's maybe. The other part of it is structurally, the nature of the market is to check these levels. So when you're putting a trade on, if you're in Trader Lab, what you're going for, not what will happen. Wouldn't we like to have the Holy Grail and an ATM in the basement? Yeah, it would be great, but it doesn't work that way. Or if it works that way for you, come to Trader Lab. We're always interested in getting better. And that's why the Trader Lab, it's not about me. I'm really just somebody like you. The only difference is I've been doing this almost 45 years. So I have done most of what everybody else has done on the planet. Not everything, of course, but a lot of it. So if I have done it, then I think I can maybe, and the other traders in Trader Lab who've done the same things you do, maybe I can save you some time and potentially brain damage. And of course, anything you do, you have to vet for yourself. RTH open, I'm 8:30 Central Time where I am. And let's look at this. Now I'm looking at this and I'm thinking, well, we can open, we can squeeze higher, take this out, has a high probability, either the ETH high or low will go. And that statistic is roughly 93% probability. So when I'm looking at this, I'm thinking this. Okay, so I'm looking for a long. Watch. Now, looking for means anticipating. It doesn't mean mechanical. Here's how it works. Now, right here, and I'm going to draw little lines. I don't typically do this when I trade, unless something is scrolling off the screen and it's material. But what I'm doing here is I'm tracking the volume. So this is the developing volume point of control. This is measuring high volume. So right here, there's more volume here at the moment than there is here. So, okay. So this is now my retail price. Let's think about this like retail. And my all-time high is here. So I'm gapped and it's a new all-time high. Very exciting. So right here, the volume point of control shifts up right here. So this is suggesting, now follow the yellow brick road. I call this the yellow brick road. It is suggesting now this is the new price and this is too low. So I'm going, okay. Now, if it comes up this way, I'm thinking long. If it pulls back here and tests this, I'm thinking long. When it breaks under here, I change my brain. My brain now goes and says the following, and this is language, foreign language, right? I don't use indicators. I have to speak market because I want to get as close as I can to real time because I can then potentially enter on a more timely basis, have my risk lower because of better entry. And yes, I take stops. So let's get over it. Stops are overhead and cost of production. It's not a personal failure, unless, of course, you're not following a trade plan and you're gambling. That to me is a potential failure in business for sustainability. And that's up to you. So right here, too low. Here, looking for this, becomes too high. I break low. I see my sellers and up here, and I don't know it at the time. I have passive sellers here. Don't know it though. That's the order flow. So now I break low, sellers are in control. This now, because I'm under it, just like I'm under that, is too high. VPOC migration. This is suggesting too high, too high. Now I'm going to label this. So let's watch. And I always go very slow and deliberately in the beginning, because once you see what I'm doing here at a microstructure, you'll understand, not be able to replicate, but you'll understand the auction. And the goal of this stream is to help you understand there are ways to trade, and it is not indicator based, because what are indicators? They're taking price and some measurement. That's fine. But do you need, I believe you can do much better and deploy indicators only when they're appropriate, when you understand the condition of the market and what the participants are doing, not waiting for an indicator to be the translator. You become the translator. The indicator can be supportive. This suggests lower. This is too high. I call this a variable high volume node. That's too high also, but I'm not going to worry about it. I'm going to be expedient. So too high, variable high volume node. What we're doing here is, this is a distribution right here. Too high, too low, retail. If I fall out of this, then it's saying we're not paying that. Think shopping. That's what this is. We are shoppers. This moves lower, too high, break here. Buyers are here. Sellers are here above this volume point of control. And it's called a variable high volume node. Just keep an eye on it. So now I break low again. So these are shorts in the Trader Lab. Let's watch them. Where do I come back? Variable, hold on, I got to mark it again. So what I'm doing here is I'm tracking the shopping, the shoppers. And what do shoppers do? If a price is too high and the retail price moves lower, so this is too high here, this is too high here, and the buyers and sellers will not pay it. And now the volume is here. This is what the thing about volume profile is about. And I'm at the all-time high, by the way. And now I rotate. Where do I come? Notice where I come. I'm going to put a little line here so you can see alignment. VWAP, mid. I'm not paying that. The shoppers leave the store. This is a short. Stop would be here. And yeah, if you get stopped out, guess what? You're stopped out. We have to get over it. So short is here. And I'm leaning against the shopping experience where they said, I'm not paying that, and there's more volume here. Volume is acceptance. When we leave volume, it might be saying too high. And again, might is the key phrase in all this, right? So what do I have here? Too high? Too high? So sequentially, I'm moving down with the volume to see where my resistance is. And the reason I can suspect, underline, that this is too high is because the volume moved down here. So if there's less volume here than here, it is saying is these buyers, that they were absorbed. And now the sellers are in control, and now the buyers are here. Buyers are here. Sellers are here. Okay? Why? This is delta. Selling is here. The passive side is here. The passive side is over here. I get my buyers here. Where was the last place my buyers got stuffed? Right there. And what else is there? Variable high volume node. I made the terms up. This didn't exist when I first started doing this. So I had to make it up. So I called it a variable high volume node because it certainly is variable. It moves around. So what you have here is a short. Now I'm going to take you to microstructure. I'm taking you down into something called a fractal. Now this gets a bit, think Russian dolls. That's the way I think the best way that I can describe this to you. This is too high. There's my test. Now, if this breaks away from me, where's the high volume? Right here. There it is. See that little node sticking out? This is the consolidation here. So I have my buyers, my buyers. And what do I know about this buyer? Stuffed. Sellers were here. If I come back to this buyer and the variable high volume node and the sellers here, the passive side is here, and then I see the sellers take over again, this buyer is under the bus and that buyer's under the bus. This is my resistance. Now let's go down in fractal. Think Russian dolls. In here, I have the same behavior in a fractal or shorter time frame. The high volume is there. I draw a line here. So I've got this resistance, and now in the new structure with sellers, I have high volume in this. I think of these when you get down in shorter time frames as you think of them, or I call them fractals because they're not clock based. It's the same concept. It's just shorter. So there's my sellers. So I know this is too high. And I draw a line, and you see this little node sticking out. That's high volume. So now if I get a retracement, I'm looking to sell it. There's my short entry. My stop can go here or out here, wherever you want to put it. Me, I'm okay because I know what happened here. That's the short. And it's off to the races, right? This is the next target here. And why, you're asking? 79-ish% probability of getting taken. Now, two possibilities here. Let me give you the possibilities. Come here, it's too low, and come back here. That's one. The other one is break below it, test it, and add. Break below it, test it. Now, this is a bit advanced. This might not be your thing. Let me show you. Now, this is an advanced short. Now, subject to your plan, you could just be hanging out working on your crochet. But this is the retail price from the entire ETH, and it is a target coming down. Now, I break below it, and I come back and check it. Now, let's look. Too high, microstructure. I'm just going to start showing you structure in fractals. There's a little high volume right there. Let's see if you see something familiar. Now, we're on the way down. This can be developed into a trade management process, and of course, you have to vet it for yourself. Watch. Chop chop is a consolidation. Sellers are here, and the passive side is here. Micro high volume is right there. Break, test. Too high. Break. Break. Passive side there, passive side there. Break. Test. Too high. Break. Break. Test. Break. This is now an add subject to your trade plan in the Trader Lab. And why might we add? Well, we have other targets below. What might they be? The ETH mid, another target. Now, again, this is subject to trade plan. 62%-ish probability, past performance, not indicative future results. And let me just see what else is over here. Okay. Overnight mid, another target. So for me, if I take a short here, I'm scaling here. And then I'm holding runners. And that's all subject to the number of contacts. Now, the next one is this. Fill the gap. That's not unreasonable, is it? This. And one more. This. And or you could be done here, it just doesn't matter, but there's more. So this is the short sequence. Now let's talk a little bit more. There's a few things you can think about now. What's your trade management? I mean, this is really important. What is your trade management? It's not that you have to get all of this. Some traders are going to be just managing and get taken out here. It'll come back and they're in a shorter time frame or fractal. They'll be putting the trade back on again. going for these statistics. Other traders are short from up above, and their trade doesn't fail, unless we get all the way out here someplace. And they're going to ride this thing, and they'll live with what happens. Now, VPOC migration. So let's discuss what this means. The volume point of control is the retail price in the developing daily time frame. Consider it like a higher time frame. Inside of this are little auctions that give us also micro high volume or fractals. So if you look over here, there's one right there. There is the overnight volume point of control. This is too high. Now in this structure right here, we have a low volume area out here. Think of it this way. When the volume dries up, it's like a shopper going, there's always somebody in the store that's going to pay too much because it's convenient. But you notice we run out of volume. This becomes an outside edge out here. I'm going to mark it for us. I think we're coming to a location here that's meaningful. By the way, we do have a long on in the Trader Lab also, which I'll get to. And I narrated that one in the Trader Lab, but it's not what I do. Notice where we come, outside edge. So what this is doing, it's working this. When the market is directional, and then we change behavior. What happens is, and this is something you would understand, with work and development, that there's a transition in the market behavior. The market gets directional, okay, but then it changes into rotational. And in this context, considering we have this open below, which was the retail price from yesterday, and settlement, there's a reasonable probability that we'll get here and at least fill the gap, right? So, but when we come across, that's called mean reversion. So now I got to turn off an alarm over here. Hold on. It's going to drive me crazy one moment. Sorry, guys. If you have questions, please post them. I'll come up for oxygen real soon. But I want to get through some of these trades. So this now, when we cross over this, now we're in two-sided trade. And that's where this comes in. Because now we're coming out, I'm not going to pay that. And then we're in rotational trading. So if the trend is down on the intraday developing time frame. Now, I'm going to be speaking from both sides of the mouth, as they say. In the higher time frame, the trend is up. Okay? Maybe we can agree on that. In the developing intraday time frame, trend is down. So we're trading a short in a higher time frame long. New all-time high today. So in spite of it all, it's shorts today looking for longs. That'll make you crazy. And here's the other thing. You don't have to be trading long, short, or anything. You can just take one side. It doesn't matter. That's what a trade plan is about. You could just be on shorts, and when the shorts are done, you go to lunch. So here's our resistance. Here's our outside edge. When you cross this, it is now what's called mean reversion. And the mean part of mean reversion is not knowing where the outside edge is. But let's take a look at a couple pieces. What's this? Wasn't this our short? And where are we trying to go? Fill the gap. Watch. We come back here. Now the short is from here and that low volume node. You have your scale. You're still looking for this. Right here, you fill the gap. And of course, you're going to get buyers right here. You see the absorption. We have a stop sweep. We've got icebergs. There's like 1,000 icebergs or so going off here, and they're covering. Okay, that's what creates this. Now the question becomes, we have settlement, and we have this is the retail price from yesterday. And there's another piece. At 9:30, we have something called the initial balance, and that's the low of wherever the low is at 9:30. So the low is here. Let me just confirm this is the IB low, 58.91 quarter, right there. So it's covered up. 58.91 quarter is going to sets up a additional trade here. Let me just mark this because it's covered up, so we know where it is. IB low. Now this is part of a structured trade. Oh, I don't like that color. Let me just change that. Cranberry. So this is the first hour's low. Now let's go back to those statistics. There's a 96%-ish probability that will take out either the first hour's high or low. I don't know about you, but at the moment I'm leaning for the first hour's low. How about you? This. So if I know I have over a 90% probability of getting under here, that puts this on the hit parade. So when I pull back, now this is subject to, again, what I mean by subject to is your plan. Some traders are just going to be short and they're going to ride this out. Other traders are going to cover right here and then look to put the trade out again at another location or be done with it. For me, when I get into something like this, I really open up I allow the rotations. My thing is to just get risk neutral. So over 90% probability to take this out, target here. And this is all Trader Lab trading. Now, there's more. And you go, really? Yeah, more. If this is the IB, we have another structured trade. Now, I'm going to go back. Before I go into this trade, I'm going to look up and see if you have any questions. And thanks for your patience. Okay? RP, I don't know if the scale range is too tight. If it's your plan, if it doesn't fit your plan, then that's not a trade for you. That it is too tight. For me, if I have, there's it's statistics and the condition of the market and the fact that we have longs in the market from yesterday, and we can get what's called responsive selling. We can flush the longs out. I know that. And I don't know what's going to happen naturally. Whenever it does happen, it just happens. My plan, I'm okay taking that short because part of that is also experience. But as for developing traders, the discipline is not taking a trade that doesn't fit your trade plan that has a statistical edge. That's really what this is about. What I do, I'm just showing you structured trades. And for me, because I recognize and anticipate behavior, I might be able to execute where other traders, it doesn't fit and they don't execute. But let's assume you don't take that trade. There's other entries here that are structured trades. So there's other ways into it. So, and as far as, by the way, I see there's a question, can I look at NVIDIA? I really can't. I don't have stock data. I don't trade them. But the auction and what you're seeing here, it all works the same way. You could be trading anything, soybeans, currency, pick one, doesn't matter, gold, stocks. This process is generic because it's built on the basis of how the market works. How are we doing here? I'm trying to see if I don't see any questions in the Bookmap Discord Trader Lab community. Okay, let's go. And if you're visiting in YouTube, please give a thumb up. Now I'm going to show you the long. We have a structured trade. Now remember I asked you, what's the trend? Right? The trend is up in the higher time frame. In our daily time frame, we had selling, and that's responsive selling. Now, this is auction-based conversation, and I cannot give you a course, if you will, on market mechanics and auction market theory in the short time that I'm able to stream for you. But you can learn this. It's not complicated at all. In fact, I think it's extremely simple. What is not simple is the randomness of rotations and the uncertainty. That's not simple. That's a real problem for us and a challenge. But understanding how the market works, I think anybody can learn this. If they put the time in and if they come to a community like Trader Lab, I think you'll be in good company. And that doesn't mean you'll become a successful trader, because trading is not for everybody. The psychological aspects of this are the most daunting issue. Now, we have another structured trade in Trader Lab. Now, I'm mentioning to you about the condition of the market. This is the retail price from yesterday, highest volume. If the trend is up, and if we have filled the gap, and if this is too low, remember, if, then we have a structured trade called the IBF. And I narrated this in the Trader Lab, and I was asking, what if we get the IBF, where might we have to scale? This is along in the Trader Lab. The first obstacle is the VWAP, so you've got to scale here. Why would we scale the VWAP? Maybe you would sell the VWAP. Well, for me, I'm going here and here and possibly back to here. Why? If this is too low and this was too high, might I come back and check it? Is it really too high? Question. So then I have, where might I anticipate retail trader behavior? Write this down. Think like a retail trader. Don't act like one. So what do I anticipate? And this is all based in these 60 PDFs of structured trades I've shared in the Bookmap Discard Trader Lab community. We anticipate retail behavior, because it's not to disparage retail traders, because we are retail traders, but they do act like lemmings. They're mechanical. They don't understand something called context. And yes, they get paid. That's the other thing. The gamblers get paid, right? So it's not about I'm right, they're wrong. It's about behavior and understanding market mechanics that may give us at times an edge. And over time, if we have an edge, we extract the dollars from the other participants. So I anticipate selling here. Why? Retail traders sell the mid. The VWAP and the mid. So what do we also know? Stops are going to be here. Stops are going to be here. And then this was too high, right? Watch. So this is a long. This is your scale. Then you hold. Watch the behavior now. VWAP. What am I anticipating? This is my scale. So I'm risk neutral. So I went from 9. This is almost, 8 points for a scale. Then I'm anticipating the selling. Now I have a choice. The choice is I could be done with the trade right here, or subject to the number of contracts. And in the Trader Lab, I only discuss a 2 lot. One is to get risk neutral. Now, you could get risk neutral based on your entry to failure and take that range, and that's your automatically scale 1. And now the worst that happens is you scratch and your broker sends you a gift basket. Or because of the way the behavior of the market is, we're looking to come back to the mean. This is called mean reversion. And the mean, this, is the same as that. This is developing mean. This is a return to the mean from yesterday. It's all the same. Back, and we're looking for this. But I anticipate selling here. So that's why this is a scale. Watch the behavior now. There's my sellers. Okay. Now what? VPOC migration. Now this is very important. This is a variable high volume node, right? You saw me do this before. Now, what do I know? I know, let me just put this in here. What I know is there's stops above the VWAP and the mid. And I know right here, if this is too high and I push off of this, there might be trouble. Instead, I push up. If I push up, now I'm taking the stops out from these mechanical retail sellers. And this is my variable high volume node. It's a retail price. It's too high. New retail price. Oh, it's too low. Let's go back to the previous retail price. And where's the stops? Here. And let's go a little further. Where was it too high? overnight volume point of control. Where's my outside edge? Out here. Watch. I haven't seen this, but let's just see what it does. Where are we? Whoop. Where do I come? Right here. What was that? Too high. What's this? Outside edge. What's this? Mean reversion back to here. This can be a short, or you could just be sitting long if you think we're going to come back outside. This is just subject to. What this trade is called mean reversion. There's the mean. This trade is called mean reversion. There's the mean. So we can do this. And let me mark this, by the way. Variable high volume node. And now you're in rotational trade and potentially an upside bias, or you're just in park and you're visiting. Anybody have a question? This is Trader Lab. And if you find this interesting, come visit the Trader Lab. There's a link in the bottom of YouTube, and you can come to Trader Lab. There's no cost. And also access all the additional education that's available in the Bookmap Discord Trader Lab and elsewhere in the Bookmap server. So this is a rotation to here. This is the same as this. This to this is the same as this to this. Let me show it to you. I'm going to show you the trigger. Now, the fact that we did this is the goal of this trade, is to get here. Primary. So if you took a short, and this is very tight, so you might not take this. Where's our resistance? There, out here. So this area. Now this is from, where was this from? All the way over here. I come back, and here's my buy stops are going off. Thanks for playing. Selling icebergs, absorption. And right here, there's no way. It looks like it's going to the moon. Breakdown. So sellers, microstructure right here, buyers here, can't get above them, break low. So this might not be doable. You know, I'm not saying I would take this. I like more range. Because what you're trying to do with this is, once you know it's too high and you get the break, you're looking for it to come back. And you might not be able to read it. I'm not sure I could read it. But I'm showing you the structure. The structure is to come here, because that's the mean reversion. Whether or not you can execute here, because you got to have enough range, you know, by the time you get into this, this is where you're going. This is your scale. And then the following can happen. We can bounce off of this and squeeze out here, or we're going to roll underneath this and come down here. So this is important. So either you're going to do this, and support in my brain is over here. So this is what rotational trading is. It's outside in, potentially to the outside, back in. That's what this is. It's mean reversion trading. It's a trade plan inside a plan. Now, the higher time frame is up, right? So why would you be taking shorts if the higher time frame is up? Well, the market was short. We have a long, which is a mean reversion trade back to this and somewhere outside. This is too high, and this is an outside edge. We know that. So the possibility is out here, back to here. If we push through here, then it sets up maybe, and I have to say that's all I got in trading, coming out the top or not. Doesn't matter. You guys have questions now. I hope you're getting something out of this. Please give a like in YouTube or a thumb up. And while we're waiting for this to ferment, and that's what it's doing, it's fermenting, I want to remind you that we have a special thing going on here that you guys, Institutional Trader Series. It's only in Discord, so if you're visiting in YouTube, click the link down at the bottom. There's no cost for this, but you do have to confirm your email so we know you're not spam. And we have, and I know a number of these folks here, of course, and excellent. You guys do not want to miss this, okay? So, and there's also a competition coming up. You can trade $1 million in sim, and that's going to be starting, and it's 100% free. You can actually use a simulator and trade with Bookmap, and go to competitionbookmap.com so you can get more information about it. Whoop, sorry about that. I thought I'd give it a shot, but that link is not live. So those are some of the things you can take advantage of. That's going to be starting, and go to bookmap.com. You can get all this information. There's also prizes and free Bookmap, data, things of this nature, cash prizes, and a lot more. I think it's a great opportunity for you guys to not only try and work with Bookmap, but to maybe pick up some cash. Cash is good, right? This is called mean reversion. So when you're in the Trader Lab, you would understand the transitions of the market from directional to rotational. Most retail traders have a one-size-fits-all methodology. So when you're in a running market, sure, we all like that. But most of the time, we're not in running markets. Most of the time, we're in rotational markets. So you need to be able to differentiate and also know the changes in the market. If you understand the changes, you would then have a plan for coming to here and maybe out the bottom and then maybe back up or not. Does that make sense? Tiger Williams, as far as the book on market profile, there's, well, first of all, I suggest you come to Trader Lab because the standard literature on any methodology, I think, is just it doesn't get you there. And if you understand shopping, which is what this really is, the auction is a shopping experience. Think about your supermarket. There's a retail price. Everybody does business there. Your can of tuna is $1. If they raise the price of tuna to $1.50, some shoppers will pay it because it's convenient, but there'll be less volume because most shoppers think it's overpriced. This is your tuna. Up here, the tuna got too expensive, so the sellers lowered it back to retail. Now, if this is too low, we can come back and challenge this price. But potentially what's going to happen is we're going to come down below here to try to locate what might be too low. Oh, it's on sale. If you're a tuna lover and it's $1 over here, $1.75 up there, there's the volume. That's the shoppers. And we come down here and it's 75 cents. If you perceive this as the fair price, you're going to buy it, and then the market will come back to retail. That's shopping, and that's the auction. And when you're in the store, the auction is very slow. They put something on sale, it's on sale for a week or whatever, and then they put it back. Here, it's all over the place because we're in a fractal. So the auction is a continuing discovery of value and price. Like this chop right here, it's too low. We tested it, too low. Up here, the chop, it's too high. We tested it. We come back to retail. So, and it can do anything, but the fact is, this is shopping. So if you come to Trader Lab, you'll get I think, a different idea of what this is. Books are good, and if you go out on the internet, you'll find there's tons of information on volume profile, market profile. But I think what you'll find is it's almost like learning to drive a car and reading about it. Then you get behind the wheel, and you certainly don't drive the car the way it was in the book or the way you drove the car when you first got a learning permit, that kind of thing, or when you were a kid, when you're first learning to ride a bike, first of all, you're trying not to fall off the bike, which happens naturally until you figure it out. Then you become a terror on the bike, if you know what I'm saying. It's the same thing with any skill set. But reading about it will give you kind of a global view of it, but not how to trade it, in my opinion. And that's just my own experience with it. I learned it from the guy who created it, and I couldn't trade with it. I mean, it made a lot of sense to me, but I was trying to be mechanical, and the market is not mechanical. It really isn't. Market is kind of a breathing, live, participant-based, interaction-based discovery of price and value. That's why this might be too high. This is retail. And if I come under here, I'm going to try to find out what's too low. And that's why this is a short, if it's in your plan, and we're looking for it to fall out the bottom somewhere. And now the joy of all this is this was too low. So potentially we can come out to VWAP, get under, the buyers were absorbed, I should say the sellers were absorbed here. So this is support. VWAP is here. So if you're taking a short here, you're scaling here, and then you're looking to see behavior here. You might get buyers right here. So don't know, it's not, that's our job is not to predict, but to anticipate and then understand where your trade shows up. In other words, if this is your trade, and it is a trade in TraderLab, it's called mean reversion. The thing about this situation is you got to understand what's happening here and be able to execute on a timely basis to get risk neutral in front of this, not at it. I always give them 1 to 2 ticks. So if you're entering here, you've got 4 points. For me, it's doable. My stop is going to be out here or over here. I'm going to get risk neutral over here. Then it's either scratch the trade if it comes back over here, or we're going to fall out here. And I can get under here, and potentially this is my target. And that's the trade. It's just one trade, and who knows? So let's watch this trade. Does that make sense? Hope I answered your question, Tiger, as far as but there is a lot of material out there. And I agree there. Jim Dalton is pretty good. You can get some ideas, but it's very important not to think of it mechanically. It's really much more nuanced. And I know most of us are looking for really structure. By structure, I mean do this, do that. Trading isn't do this, do that. It's degrees of maybe and looking for behaviors that have been vetted to give you an edge. That's why this would be a short. And why? Let's go back to why. This. Why? Right here. See, this is what the auction is about. In the ETH, this was the retail price. If we're below it, and we come back to it, and then I go into a fractal, if that there is too high, and this is the outside edge of out in here, somewhere, it's up in here, don't know, nothing precise. If this becomes too high, and now, so think multiple time frames as you like, we all do, right? I don't, but let's just call it that. And I come up to resistance, and it's too high, and now I can't tell what's going on here. I see a seller there. I see a seller here, but there's nothing for me to do here because I'm coming to test this. When I test this, so I know in advance my levels and locations, and then I don't know anything else because it's all random. Remember that. Write that down. Random. Clueless. Not ignorant. Clueless. Break here. Sellers are here. Passive sellers are here. These buyers were absorbed. Come up here. Where am I? Remember, where am I? There. Break. So this is a short. Your stop is here. This is a little more advanced because it's more nuanced. And then you're going to this. So let's watch how this trade works out. And again, I don't call trades because you don't need my stops. I get my own. I take stops. Yeah, sure. There's no way to avoid it. Because what is a stop? It's the price to test the market, price of admission. So what I have found using this process for me is I can enter with a very tight stop. And I'm okay taking a stop because when I get on the trade, I have a good idea what my potential is. And that pays for my stop. And actually getting from here to here is my stop. So I have no risk. If it comes back here, it takes me out. Broker comes over to the house and hugs me. I don't know, but that's it. That's trading. And then it's trade management and targeting. Where's my stops? Here, here. This is my outside target. Now, it doesn't have to get there. It might only come here and rotate back here. So we might only come here. So I'm going to watch the behavior here. Let's watch it together and see what we see. And Dan, if you're listening, I lost those PDFs here. They got covered up on the special series on institutional traders. So if you could repost that in the Bookmap Discord Trader Lab community and also in YouTube, I'd appreciate that because I don't think we want our listeners and visitors here to miss out on special opportunity for them. Typically, you just can't talk to these guys. And since I do know some of them, I will say that it's a real treat. Absorption was here. These sellers got absorbed by the buyers. So I have support in here. So I have a couple things I can do. If I take a short, I can be just targeting. I work with targets both ways. Selling target, mean reversion target, and now VWAP and maybe out here. So this is now, we could get mechanical buyers here. You could also be done with the trade here and you just go on to your next trade. The thing about Trader Lab is you would know what you're going to do before. The thing about a trade plan is you're not doing this. Should I get long? Oh, I made it. So, should I get short? What do I do? You already know where your trades are. That's the difference between gambling and being in business. You know where your trades are. This is the short right here to there. And now we're looking here. We can anticipate buying potentially here, back to here. Let's see what it does. Why? Well, there's going to be stops here and we're coming outside. So let's watch. And our target is here. Okay? This is Trader Lab trading. Now, I'm not saying it's anything anybody ought to do, but it's something you might want to investigate, especially because there's no cost. No cost is good. My mother said to me, free is good. Oh, okay. Remember, where's our target? Here. Now, let's talk auction. Why? And it doesn't have to get there, by the way. I mean, there's no have to or anything. It's only maybe. Why would it happen? Here's where the auction comes in. This price is too low. The shoppers rejected it, and we came back to this price. This price, and then we came back to this price. This price is too high. If this price, that one, is too high, then I can come back to this price. If this price is too high, I can come to VWAP, come back here, or down here. That's the trade. And then after that, that's all there is to this. Now, let me ask you guys who are visiting, is this complicated? If you anticipate behavior, could you develop a plan? And then, of course, accept the random outcome because it's all random. Notice what we did here. There's our VWAP check, and now we can come back here. So subject to your plan, you could just be out of this trade and not care about that. Is this work for you? It's just one trade, to there to there. Or, now let me give you the or. The or is scale, sit through the counter rotation, and risk scratching or taking the trade out here. Or, see, and then you're looking for this. Or, trade management process. Let's look at that. Where's our micro volume? It's right here. So your choices become, the trade can be over here. Is that a decent trade for you? I don't know. You got short up in here to there, what is that? One, so let's assume you got a scale. So it's 9 to 2, it's 7, and you get a, 2-point scale, 3-point scale. It's a 10-point trade from there to there. Or you're managing the trade and you'll give back this in order to try to get to this. See? So we don't know what the market will do. So the thing about this is, before you put the trade on, you know what you will do, because you don't know what the market, or I should say the participants, will do. The participants may buy this for it to come back here and then squeeze and continue higher. It is possible. Or we're only getting the participants here, and notice there's 1,000 iceberg went off here, actually there, and then we have more iceberg buying here, and here's the stops under the VWAP. So this, it can still come out here and do this, mean reversion. This is now reverting to the mean. It's the same as this. The question is, since this is too high, are we going to come out further here? That's the question. Don't know the answer. That's the question. And that's as deep as this gets. But going back to trade plan, you would know if you put this trade on, if you would exit here or manage the trade, risk giving back the MFE, and hold for this. That's what I know. I don't know what the other participants will do. It's no different than the casinos. They don't know what the gamblers will do. They don't know the cards coming out of the deck. They don't know how the gamblers play the cards. I don't either. So what do? I just wait for the bus to come, get on the bus, follow the plan, and either be done with the trade here or trade manage looking for this. Any of those is fine. It's just one trade. Does that make sense? Because we can't predict. Layers of liquidity placed above after this test. If you're talking about this, we don't know with liquidity. I find that when I'm looking at liquidity, I want to see the behavior when we come to it, because these guys could pull. They could just be here to put pressure so they could get on the other side and be accumulating, and we won't see them, We do know that there was absorption here and that these sellers down in here are in the hole and they're under the bus. These guys, okay? That's absorption. So this might have just been a skew. So if they skew the book and then I get absorption at the VWAP, and I also anticipate, remember, we anticipate buying here. And one of the things is, what do you do about that? Do you just take, that's why I'm presenting the question. I cannot give you the answer that's right for you. I can give you the options because we understand how the market works. We don't know what it'll do. So we know retail buyers will activate here, right? So we know this sets up a return here. It's called mean reversion. And we can still come back around and just do this kind of, because mean reversion is rotational trading. The thing we don't know is, are these mechanical buyers, and are we going to potentially just come out and then break back down and take this out? See, this is the part you don't know, of course. So the smart trade on this is just here to here to here, and then you're done. And then if it falls down here, and then you're not in it, doesn't matter. But here's what we need to take away from this. Outside in. Outside in. It's a specific trade plan in the Trader Labs called mean reversion, and it's trading two sides. This is not your freight train going, going sliding down the mountainside. This is different, isn't it? So if you're trading this like it's the freight train, you're going to have a problem. And this is what most retail traders do. They just try a one size fits all. And then when they get chopped up, which by the way, we all get chopped up, but they're going to try to curve fit so they can catch the big move next time. Meanwhile, if you're in Trader Lab, once the condition changes, you're not trading for the bullet train. You're trading this. And then you choose which side you want to be on. You could be short from here, or you could be taking longs back to here. For me, as long as I'm below this, I'm kind of leaning on the short side, but I'm only trading rotations. So I'm not trying to hit a grand slam out of here for me. And that's not a recommendation. I'm just saying is I just kind of trade within sandboxes, and right here is the sandbox. This to this to this. And if I can't get below here, I can now, there's shorts with their stops sitting above these swings. We can then come up and squeeze. This is how this works. Remember, where's the stops? Weren't they there? Remember? What did we do? We took them out, and now we mean revert. Where's the stops on the other side? Well, they're up here, and they're definitely over these guys. You see? So what do we anticipate? Stops, rotation, squeeze, and then you got to see what happens out here. That's the mystery. Is this logical? Yeah, Herman is saying that he thinks we're going to take out the high. And by the way, the higher time frame trend is up. We get through here, we have the possibility of coming out here. And that sets up something called a neutral day. Now, it's not high on my radar at the moment, but this is important. If I come above this, then I'm going to be thinking a bit differently. I'm going to start targeting this. Because right now, the market is short. Where's my stops? Well, the usual suspects, mid, VWAP, and all that. But out here is a low volume node. In fact, I'm going to move this to the current low volume. It's 498. This is a low volume node. So what this is, I'll just show you this. This is the outside edge. And the low volume is right here. This low volume separates this distribution. The distribution, there's the high volume. It was too high. We left it. So resistance is out here. If I get over this and get up into this area here, then I have to be conscious of this. Not a recommendation because there's obstacles in the way. We may never get there. We may just rotate around. But higher time frame is up. So it's really, I can't predict anything. So my thing is I don't do that. I just go, well, it might do this, it might do that. Where might it do it? Where might we do it? Well, this was too high. If I come back across here, now I'm going to continue squeezing. And now the shorts in here are going to start becoming buyers and new buyers. That's the logic. So remember, this was the key area. And if you don't get down here, you're going to get taken out, possibly, if you get over here. That's it. There's nothing more to it. Now, if you bought the ID low, which was our long entry, not including this over here, which is a rotational trade in this time frame, you could just be sitting long and just waiting to see if we squeeze these guys out. And that's a heck of a range, don't you think? Don't forget, our last long was here to there, and then up to here. Short is to here, and maybe to there. If not, its mean reversion back to here. And if we get over this and that and come out here, of course, then potentially to make a new high for the day or not. This is trading the auction. It's not predicting anything. It's trying to stay in alignment. Does that make sense? Debbie, if you're asking me, no, am I only looking for shorts? I'm trading mean reversion right here, but I also did not get here at the moment. If this is still too low and I'm not going to test it, then if I get above here, then potentially out the top. And it's not a recommendation, Debbie, because I don't know anything about predicting. I just try to get an alignment, and I look at the behavior, and what does it tell me? I'm okay with this as a short for this, and I'm okay for this as a target because it's a targeted mean reversion trading. Same reason when we did the IBF, it was a target coming up. Same thing. So this is a target coming up. This shifted down. This is too low, and then we come up here. That all fits. This is mean reversion coming back the other way to here. This fits. This, though, is where we anticipate buying unless we fall through it and come down here, right? So that was the short. The fact is we came here and we got our buyers. Now my resistance is this. And if I get through this, then the squeeze is on. So, for me, I'm really very flexible to this. This to here is okay for me. And then if I see the buying, then I have to be conscious of where's my stops. It's here. Because this flat top is not strong. It's not strong. So, and I know there's sellers here, here. Sellers are here. Sellers are here. So this is my resistance. It's in alignment with overnight VPOC. If I come out above here, then I'd be thinking longs. But at the moment, so you could be at park right here. But I think, the market is short, and I'm always trying to think who's on the hook. Where are their stops? Because the sellers in here have their stops here and here. So right here, I'm either going to rotate back here or I'm going to squeeze. And if I start squeezing, then I got to think about a long. It's not a recommendation. But yeah, so possibly long. This is balance. So I have to come out of this to potentially get long. Otherwise, it's just rotation. I think the smart trade here was to here. I mean, in hindsight, obviously, but it's a target, you see. So, and this is the extended one. So when it comes over here, you could just be out of this thing, and just say, okay, that was nice. Still a nice trade, I think, in this time frame for fractal. How are we doing in YouTube, guys? Please give a thumb up and a like if you're getting something out of this. By the way, I want to remind you guys, I posted in, and these are available out in on YouTube in the Bookmap. You can find them, Bookmap, in the Bookmap server or in the Bookmap Trader Lab library. Yesterday was higher time frame trade plan. Day before was a specialty, if you will, something called VPOC migration, how to trade it, and for trading in fractals. Those are both available to you guys and in the library and also out on the internet. And if you type in Bookmap, and I think it's _Tom_B or Tom B, can't remember, you'll find all my streams that are out there. And I think you'll find they're fairly popular. And it's just a piece, you can't get a full education unless you really come to, I believe, if you need to come to the community and have support. A lot of traders have walked in your shoes. There's nothing new. There's no secret sauce. There is nothing. It is really all here. The issue becomes our nature is to look for certainty and avoid risk and the pain of loss. So we take spaghetti and throw it against the wall with a belief that more creates more certainty. It doesn't work that way. More creates less. More creates conflict, ambiguity, thrashing, and inconsistency. The casinos only play the games the same way. They're not making them up. They're not changing how they play the game. If they take a loss on the previous hand, they don't do something different the next hand. We do. All the things we do, casinos don't do. Yet they are doing gaming, and that's what we're doing. So if we want to be in the gaming business, which is just statistically based probabilities, then don't we, in order to extract that statistic, assuming we have an edge and we've done the work, the only way we're going to get it is if we just apply the game or the trade exactly the same way. And we have a real problem with that because we're human and we are emotionally based. Business, or the way the casinos operate, there's no emotion involved. It's just business. So, and intellectually, I know we believe we can do this. The way you get your arms around the fear and the emotional chemical triggers in your brain, and that's what's going on. You're under the influence. You wouldn't drive a car under the influence, but you trade under the influence. You wouldn't put your family in the car, right? If you have too much to drink, hopefully. You give the keys to somebody else. But when we go to trade, it's like we should be handing the keys to somebody else because we are intoxicated with hormones are released in the bloodstream. All kinds of stuff is going on. The reptilian brain is in charge, and our consciousness, in spite of, and this is why when you're intentional and you don't do it, it's because there's other elements at work in your body and in your mind. You need to understand that. You come to Trader Lab, you'll learn about yourself. The other part of it is, how do you get control over that part of your humanity? That's where edge, trade plan, and statistics come in. If you're just playing a video game, you're always going to be impulsing and under control of your emotional state, which is chemically induced. If you do the work, you'll actually know where your trades are that actually give you a statistical edge. And like the casinos, you only play the games that have the edge and you leave the rest for somebody else. As a developing trader, you can add more and more and more. And then I share these in the Trader Lab in those 60 PDFs that I show all the time here. I won't do it today. But you can come to Trader Lab, download 60 PDFs of these structured trades, and then you pick one or two. And then you become expert at it. So when it shows up, you know what you will do. You're not wondering, what should I do? Would that change your outcome as a developing retail trader who's looking to build a career in trading using that process versus making it up as you go? Even though you have intermittent winners. By the way, I always like to say this because it keeps us going down paths that might be unsustainable. And that is, if you didn't have a screen, you didn't have anything, you just pushed a button that said buy or sell, you're still going to have winning trades. That is the fallacy of randomness. So we are in a random environment, and so are the casinos. If we only play games that have an edge, does that tilt things our way? That's the question. What do you think? And if you want to find out the answer for you, then come to Trader Lab. Use the link in the bottom of YouTube. Visit the Bookmap Discord Trader Lab community. There's no cost. And maybe you'll find out what other traders are doing, have walked in your shoes, just like I have. And find out what they are doing and see if maybe you can adjust your outcome if you are not getting the results you're looking for. I coined a term called Trader Groundhog Day. That's when you do the same process and you keep tweaking and tuning to fix something, which may actually be a defective process. It may not be tuning and tweaking or curve fitting because the market is unique in every moment. So maybe that's not the real way to go. Maybe it's not slamming as many indicators as you can over the market so you get a buy, sell, red light, green light and anticipate having an ATM in the basement. Maybe that's not what this business is. Yet, I think we believe that's what it is. I'm going to say, for me, when I started in the business, I thought that's all I had to do. Find the right mix of time frames and mathematically based indicators. I even built trading systems using a process so I could optimize them and use them across multiple asset classes when I was managing money. And over time, they were always breaking down. So I was always optimizing them, you know, chunks of data, walk forward testing, all this kind of stuff. And that broke down too. And I said, well, gee, I got a system. I can optimize it. That's what you guys are doing if you're eyeballing indicators. I just did it on steroids. And I still had the same outcome over time, in spite of having runs of winners and profits. But over time, I was always chasing the market from behind. Because how can you trade right now based on what happened yesterday or even an hour ago? Think about it. If you want to find out more about understanding market mechanics using order flow, integrating a high-tier tool like Bookmap, order flow tools with the auction, in other words, how the market works, why it does what it does, and how, at times, getting in alignment with it, and only interacting when you have a statistical edge, just like the casinos, which do really well with that business model. If you're interested in that business and being potentially in the trading business, not in a video game, please accept my invitation to visit the Bookmap Discord Trader Lab community and take advantage of all the other additional education. Stocks, options, crypto, iceberg behavior, order flow, of course, what's going on here, market maker behavior, liquidity, all of it, and much more is available, and there's no cost. If you are interested, there is a free version of Bookmap. A digital version comes with data. These links are in the bottom of YouTube if you're interested in them. Please give a thumb up, by the way, give a like. And there's also going to be some special institutional guests in Discord exclusively. So if you come to the Bookmap Discord Trader Lab community, you have to confirm your email so you know you're not a spammer. You will have access, but it's for Discord participants only. It's a special series. Bank traders, hedge fund managers. It's always good to understand what this business is about. And Bookmap, it's about education. If you get educated and you improve your trading, it's good for all of us. And if you're interested in Trader Lab, click that link. Like to see you there and say hi. And remember, the Trader Lab is a community of traders. Notice where we came, right? That's why if this is too high, we're in this mean reversion. Now, I can't predict what it'll do. What do I know? The auction. Do I know what it'll do? No. Take that off the table. What I know is, and if you've been listening to this stream, this is too high, and this is where the buyers would come in. If I get under here, that's a structured trade. Now, what you do is up to your trade plan. The high volume here, watch, is here in this structure. So micro high volume is there. Test, break. The volume is here. See? I can't show you everything in an hour, in a bit, but I think I can share with you market mechanics, order flow, understanding what happened here, why, and why this is important. And if we can't get above here, remember, I would be thinking long above here, then it's potentially mean reversion, which is back here and still back here. And if I get under here, this is the trade. Hope you got something from it, guys, and thanks so much for visiting Trader Lab. Click the link in the bottom of YouTube. There's no cost to be a participant in the Trader Lab community. I'd like to meet you there. And please give a thumb up on the way out. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and develop our craft. Thanks again, guys. Thanks for visiting Trader Lab. Look forward to seeing you soon.